Hello and welcome to BarEye's manager training series for self-count slash speed count pro clients. This is BarEye CEO Jamie, and we're going to run through as quick as we can through the basic requirements we have for our managers of our said self-count system. And the idea here is just to communicate the things that we need our client managers or owners to do so that we can provide the service that you've hired us to do as best as possible. So let's jump right in here with an introduction. So what is BarEye? BarEye is a service company. All we do is inventory for bars and restaurants, and our aim is to make bars more profitable by using information more intelligently. So the key difference with BarEye is accountability. Accountability we define as comparing how many ounces were poured versus how many were actually sold, and this contrasts with what most bars are currently doing in the way of inventory. So when most bars take their period inventory, they sum the value of what they have on hand, and they use it to calculate their liquor cost, which is normally broken down into categories just by draft beer, bottled beer, liquor, and wine. So what your liquor cost tells you is a financial measure. In accounting world, they call it cost of goods sold, and it basically tells you for every dollar of sales, how many cents do you have to spend purchasing product. So a bar which has a 20% liquor cost means that on average, for every dollar in sales they get behind the bar, they spend 20 cents purchasing product. That's all well and good. What's the problem? Well, the problem is that most bars are missing a lot of product. When you actually go to the extra detail and you compare what they're selling versus what they're actually pouring, there's typically a big difference. And so what we do is we measure that difference. We call it accountability, which is a score out of 100. And just to explain that, if you used 100 measures of product and you poured 100 but you actually sold 95, that would be a 95% score, and that would be a pretty good score. So ultimately, we go to a higher level of detail. We precisely compare ounces wrung and ounces poured. This extra detail and granularity will yield some profitability advantages because you'll be able to have a much clearer idea of what's going on behind the bar. On the flip side, it also requires a higher level of attention to detail because you'll find that when there's errors, they will be glaring in our results. For instance, if you were to miscount a couple of bottles of Jack Daniels with a clipboard and liquor cost method, you probably wouldn't hardly notice it because it would hardly make a change in your liquor cost. In contrast with our system, because we're precisely comparing our Jack Daniel's sales with our usage, if you've miscounted 2 bottles, we'll show those 2 bottles as missing, and we'll have to check back with you to make sure you didn't double count them. So just to say it on the front end, we want to try and be very attentive, get organized, and do things correctly the first time, and that will cut down and improve the speed with which we can produce our results. So as we said, the point of BarEye is to precisely compare what's being poured versus sold. The what's been poured element, honestly, from our end is quite straightforward because all the liquor bottles and all the kegs at different bars are all the same. We're well familiar with those. So that part's easy. What is specific to your bar is the sales. And in order to figure out what you sold, we interact with your point of sale system, and we actually write recipes for every single button in your point of sale system. So when you hit that Jack Daniels button, typically we'll assign 1.5 ounces of Jack Daniels, and then obviously if that button was pressed 100 times, we would know that in total we should have used 150 ounces of Jack Daniels. We can compare that to usage. Obviously it's more complicated in many cases. Lots of drinks these days in particular have multiple recipes, but we go to the detail to write a recipe for every single button in the point of sale system. And then as an ending point to the introduction, the guiding philosophy is do it right the first time and focus on improving the results, not producing the results. What do we mean by that? Well, to start with, we're going to have a lot of moving parts. We're going to have things like the invoices we have to take care of. And at the start, there's going to be a lot of energy expended on putting in place systems and making sure we capture everything correctly. Typically, there's a bit of a ramp-up period, but when we get through that ramp-up in the first 2 months, our aim is to make it so that we've got all our ducks in a row, everything is correct, we've made those incremental updates to the point of sale system and perhaps to some of our internal processes, and then it means that after that point, we can produce accurate results that everybody is confident in quickly, without pestering you with extra questions, without having to email and find out why this product's missing, etc. And from that point forward, we can really concentrate on using the results to do better, identifying those variances, and letting the numbers affect the real life and the real world, and ultimately, of course, try and make more profits.